What if I told you there are billion-dollar companies right now trading at a discount? What if Wall Street is completely mispricing these stocks and nobody's talking about it? In this video, we uncover the 7 most undervalued stocks hiding in plain sight. Some of them paying out massive dividends while everyone else scrolls past. So here's the question. Are these value traps or the best deals on the market right now? Let's find out. Hey everyone, welcome back to Artificial Investment, where we make investing feel less like reading the fine print on a credit card application and more like a conversation with your financially savvy and slightly sarcastic friend. I'm Jason, and today we're talking about everyone's favorite buzzword, undervalued stocks, aka the clearance rack of Wall Street. Let's dive into which stocks are on sale and whether they're worth adding to your cart or portfolio. Undervalued stocks are the introverts of the stock market. Quiet, mysterious, misunderstood, but often the ones worth getting to know. They're trading below what analysts think they're worth, based on things like PE ratios, PEG ratios, or just some good old-fashioned common sense. Sometimes a stock is undervalued because of bad news. Sometimes it's just out of style, like cargo pants in 2010. But trends change, and that's where opportunity lives. But before we go any deeper, let's do a quick crash course for the newer investors out there. PE ratio stands for price to earnings. It tells you how much investors are paying for each dollar of profit. Lower can mean cheaper or just troubled. PEG ratio is the PE ratio divided by expected growth. A PEG under 1, that's often a sign the stock is undervalued and growing. Dividend yield is how much a company pays you annually in dividends as a percentage of its stock price. Think of it as getting paid to wait for your investment to grow. Fair value is what analysts think a stock should be worth based on fundamentals, not hype. There, now you can sound smart at brunch. All right, let's kick off with some big names, companies your grandma probably owns in her retirement account. And honestly, she might be onto something. Number 1, Coca-Cola, ticker is KO. Current price, $69. Nice. Dividend yield, 3%, PE ratio 21, which for Coca-Cola is actually a bit lean. Why it's undervalued? The market's treating soda like it's going out of style, but Coke's brand is stronger than your morning coffee. Johnson & Johnson, ticker is J&J. Current price, $171. Dividend yield, 3%, PE ratio 18. Why it's undervalued? Legal drama and healthcare market fatigue have made this stock feel like it needs a Band-Aid, which Johnson & Johnson conveniently sells. Number 3, Exxon Mobil, ticker is XOM. Current price, $107. Dividend yield, 3.4. PE ratio 11. Why it's undervalued? Oil prices dipped, and so did Exxon. But energy demand isn't going anywhere, unless the world suddenly stops needing to move or heat things. Number 4, Verizon, ticker VZ. Current price, $43. Dividend yield, 6.5%. Yeah, really. PE ratio is 8. Why it's undervalued? Everyone's distracted by flashy tech stocks, but Verizon's out here providing the literal internet for them to tweet about it. Now, for the unicorns, the stocks that are not only cheap, but also growing. It's like finding a Tesla on Craigslist for $8,000, but it actually works. Citizens Financial Group, PEG ratio under 1, a golden rule in value investing. It's trading low because regional banks are getting the cold shoulder post-2023 drama. But CFG is stable, profitable, and they're still answering the phone. Next up is Chart Industries, or GTLS, cryogenic tech, hydrogen infrastructure, basically the cool kids of industrials. Recent price drop, investor jitters over integration, but backlog and innovation, still hot. OPRA Limited, OPRA, not just a web browser. OPRA is expanding into mobile and fintech. PEG under 1, cash rich, and still somehow flying under the radar. It's like the indie band of tech stocks. Let's talk about tech. Not the overhyped kind, but the underdog comeback stories. Microchip technology, or MCHP, prices in the mid-80s, PEG ratio is 1. Analysts at Citi see 30 to 35% upside. This isn't just some fly-by-the-night startup. They're profitable, dividend-paying, and quietly powering a lot of the future. And then, quick bonus stock, shout out to Broadcom, AVGO, and Micron, MU. Not quite undervalued, but definitely worth watching if tech rebounds. So, what did we learn today? Some of the best deals aren't the ones going viral on Reddit. Big brands like Coca-Cola and Johnson & Johnson are quietly kicking back dividends and waiting for a comeback. Underdogs like OPRA and Chart Industries have room to grow and might actually be profitable while doing it. And even in tech, there's value if you know where to look. Just remember, undervalued does not mean guaranteed to go up. It just means you're starting from a better price than most. Do your research, diversify, and always double check that you're not just buying a value trap. So, if this video helped you out, hit that like button harder than the market hit regional banks last year. Subscribe for more investing insights, and drop your favorite undervalued stock in the comments. I'm Jason, and I'll see you next time on Artificial Investment, where value is the new hype.